Stream. Oh,
Second.
yo, StreamYard's funny, you know. Sometimes it picks up your audio when
Excuse me.
it's just like, let me just tell everybody your whole conversation. Even though
Funny,
you
you know, sometimes it picks up your audio when excuse me. It's just like, let me just tell.
Okay, cool. Now we're definitely working. Sorry, what did you want to say?
I was saying, like I just said there in that audio, StreamYard's funny because sometimes when you've muted, it plays out your whole audio anyway, for the whole world to hear.
Listen, I'm glad you acknowledge that that streaming can be a mess behind the scenes. Like people don't know how much you
have no idea
to get it right.
They have no idea.
No, the whole TV show, lads.
Let me just repeat that again because the Matrix attacked and you guys will hear me go. So it's currently 6 minutes past 8 p.m. UK time, Monday the 29th of January 2024. Welcome to another amazing episode of The Game, which is a free weekly financial literacy webinar. We cover everything macro, stocks, crypto, with a particular focus on making industry billion-dollar reports really fun to break down in common English. So
What
if you'd
we're
like
doing today.
And today we are covering part 2 of the Messari 2024 crypto outlook. If you missed the part 1 episode, please do a catch up. If you don't know who Messari are, they are one of the best people to pay attention to, especially at the start of every single year, because every year they produce a report. And since 2021, I think, they've been relatively accurate with their forecasts and predictions. So definitely something to get into. So if you'd like to join our webinars, every Monday, 8 p.m. till 9:30. As you can see, we did the previous Messari report part 1 2 weeks ago, and now today's part 2. We do a webinar called Fridays, NFT Fridays, which is every Friday, 8 p.m. till 9 p.m., covering non-fungible tokens and digital assets. You know what? On top of that, on Wednesdays now, in person, if you are based in Manchester or know anybody in Manchester, we do an in-person event. In Manchester, through our subsidiary company Shuriken Sounds, focusing on helping artists monetize on their art via AI and Web3. And then Sundays we've got Technically Speaking. So we actually now do 4 classes a week, which is crazy. We've gone from 3 to 4, but the fourth one, the extra one's obviously in person. Maybe we'll get that streamed at some point. Okay, so quick disclaimer, terms and conditions before getting started. Oh, sorry. To join the webinar, go to blockchain.sensei IG and then click the link in our bio, which will take you to this link here, superjoin.com/blockchain-sensei for everything blockchain sensei. Join our Telegram, join our subscription service where you can speak to me and Jay, or me, Jay, and Miss Hardin if you pay for a bigger package multiple times a week. And you can also join our free Zoom webinars. So let's get into the disclaimer and then we will get into the report. Do you want to do the disclaimer? Because I feel like I always do it.
You me? Oh, you? No, Mr. Harding. Guys, I barely know how to speak. I'm the least articulate person I know. Come on, guys. All right.
Said the guy who speaks multiple languages.
Damn, you're rating me up. All right, cool. All right, let's get it. Disclaimer and terms and conditions. All content is for education, information, and entertainment purposes only, and should not be considered as investment advice or recommendation to buy, sell, hold any assets, or place any trades. Please do your own research. Our content is intended and should only be used for informational purposes and usage. It is very important to do your own analysis before making any investments, which should be based on your own individual circumstances. You should always take independent professional advice from a professional advisor, or independently research and verify all and any information you may find on our show that you wish to rely upon. And that is whether you wish to make an investment decision or otherwise. All investments come with what, guys? Nice. So please do your own what? Research. Your own research. We are not financial advisors and do not intend to be perceived or received as financial advisors. My brother, Ninja T, Are you a financial advisor?
No, I am just a DJ.
Mr. Are you a financial advisor?
What's finance?
There we go. Is anyone on the call a financial advisor? If you are, then please speak up now. Otherwise, this is it.
Forever hold your peace.
It's gonna wait. No, we don't have any financial advisors on this call. However, we are working in collaboration with several accredited advisors. If you are unable to mitigate your risk, then please contact us immediately so we can refer you to an accredited financial advisor.
Mm-hmm. Oh, wait, one sec. Go back to the StreamYard. Boom, 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 boom. Yes. I'm going to make you the host. 1 second.
And Keish, you're up first.
Make co-host, yes.
First, I had C5.
C5.
Yeah, I got DeFi.
Oh no, we've skipped a bit.
What did
Okay,
we skip?
I'll go first. We skipped. Let me see. Hang on a minute. Because we
I
got
done chapter 6.
Okay. You did C5. All right then. I've uploaded my notes to the drive. Let me know when you can see my screen.
No, yeah.
Oh, well, it would help if the report was there. Why is it? Well, that's interesting. I'm gonna have to do it from my phone.
What, do you have the report on your computer?
Nah, I did it on my phone and I uploaded it to the drive, but now it's saying that it's not there.
Oh no, not another one of
Oh
these.
no.
What, do you have the report on?
Wait. Oh, there we go. I just got connected to the Wi-Fi. Hold up. Connect to the Wi-Fi. Upload the thing. Thing uploaded. Come on. Sorry about not being prepared like this, guys. I thought I was prepared, but I just wasn't. Oh my days, why is this being jarring now? Yeah, I thought I wasn't first as well. That's why. Oh, this is dead. Yeah, someone else might have to go first.
I can share my screen and do a read, or
yeah, I mean, we don't have to go through the report in the order the report is written. We just do sections, isn't it? So I can go first and do DeFi, or Keish can go first and do C5.
Yeah. Just whilst
okay. Let me share my screen. I'll do mine. Just guys, I apologize for so many tabs in advance. Pray for me, please.
We're praying, Keish, and don't forget to pray for me as well, because I have the same.
Guy's got multiple tabs and multiple browsers open. He's got tabs.
Listen, chill. Okay, so I'm gonna skip to 5 and go straight to 6. So in this report here, we're gonna be looking at top 10 trends in CeFi. What is CeFi? Just traditional finance. Let's just keep it simple, right? CeFi, just the normal stuff. It's not DeFi, it's not decentralized, it's centralized. All right, cool. So yeah, well, this is some of the stuff we're going to cover. From reading this, there was a few little things that I think were hints, a few little bits of insight, and some really deep game that was in this part of the report, which is really nice. One of the first things that I saw is the narrative. You know, Coinbase crushed it. Binance lived to fight another day. Like, Binance is just clawing their way through, you know, even though they're such a large institution, but the narrative right now is very, very much so against them, as you can see, just from this language alone, which I thought was really interesting. Now, obviously, they're saying Coinbase is doing extremely well. As I said, they crushed it, etc. But I just thought this is a little interesting. They launched a real-world asset on-chain platform.
What?
Over there, called Project Diamond. Yeah.
When?
Well, it's just right here, bro. So I think we need to do a little deep dive on this one right here.
Yeah,
Have a look
open
at
that
Project,
page, please. Open that page.
Project Diamond. Okay, 1 second. It might not.
Put it in the chat for the peoples. Because that's a bit mad. There's a whole secret freaking Coinbase platform that no one knew about.
Yeah, 1 second. 1 second.
That's actually brazy.
What, like a subsidiary centralized exchange?
A real world asset tokenization. And it's got a token.
Hold on. Let's see if this is the right one. This looks like it's spelled incorrectly.
Well, that's the official Coinbase website.
No. I know, but it could be any token. Hold on.
This is deep alpha straight out the gate.
Yeah. You
know what? I'd love to give a talk soon, right? And be on the panel with some bigwigs and just go, oh yeah, just like Coinbase's Project Diamond, and them to be like, huh?
There you go. So yeah, Project Diamond developed by Coinbase Asset Management combines Coinbase Prime's custody service, the exchange's Web3 crypto wallet, USDC layer 2 to create capital marketplace. Cool. It's basically just a new marketplace just for reward assets. But anyway, guys, yeah, do your own research on that. I'm not going to go to because we're going to be here forever. Cool, back here. See, I thought that was quite interesting. Revenue, whatever, blah blah blah, was cool, but I think that this little show was quite interesting. So I'm basically just going to snipe out all of the shows and quite interesting bits of information. Cool. So yeah, other than that, some on the legislation side of stuff, what is paving the way for big money to come into the game? We're talking multiple billions, right? Surveillance sharing agreements. So for institutional compliance agreements, they have now got or started to pave the way for institutional entry to crypto using something called surveillance sharing. And it was always cited and it's pushing through and allowing for things like the spot crypto ETFs to be through, and basically further track and traceability, which is obviously the government's motive, right, with blockchain technology as a whole. I don't know if you noticed, but it's really trackable and traceable. I can kind of know everything about you just from your wallet. I wonder why. Cool. And then another thing that was very interesting to me is that they mentioned Coinbase and Kraken together. I just think Kraken works incredibly well, but a lot of people are sleeping on Kraken. But also, I think that there's a few exchanges that are in line to get attacked. You know, we spoke about Binance. I don't really see Coinbase getting attacked anytime soon. They're being put on a pedestal. Kraken and KuCoin, I think, are on the list for exchanges that will be attacked, in my opinion. Okay. Okay, yeah, this was also very important on the tax element of it. So it also shows what Binance was doing as well. But yeah, so basically, so enormous amount of customer pain for Binance's American users who failed to correctly report their crypto holdings or their gains. Binance may have just handed the DOJ and IRS a honeypot of naughty little boys and girls just in time for Christmas. So they basically are saying everyone who's tax evading, they might have just handed all of their details straight to the IRS and straight to the regulatory bodies immediately. So this is something that obviously centralized exchanges are going to be forced to do, but this is basically why Binance is still surviving, because they're obviously complying, but at the detriment to the actual customer base, which is quite interesting. And then cool. And then this was another thing that was interesting to add on to that. So the lower hanging fruit of tax overdue pursued would be like the smaller amounts, which is quite interesting. And then they'll pursue the smaller, lower hanging fruit before going for the more complicated liquidity pool, token swaps,
Of course it
etc.
would.
Yeah, exactly.
Why are you going to
And
go after billionaires which is what you should be doing? When you can go after smaller whales.
yeah, and another thing here, which is a big show, CZ's next. What's CZ's next move?
Ooh.
Decentralized DeSci. So do your own research on that, guys.
DeSci.
DeSci. Don't sleep on DeSci.
Decentralized science.
DeSci, bro.
Decentralized what?
Science.
I don't know if that's what it
Ooh.
actually is. That's just me guessing.
Yeah, yeah. So keep your eyes on that sector. I think that's huge. Obviously, they have it as like the smallest little thing at the end. You know, just why not? Cool. Binance feels blah, blah, blah. Yeah, so the Binance settlement feels like the beginning of the end, and probably responsible for 51% of my bullishness going into 2024. And a weight has been lifted, and we can now move forward with Binance. So yeah, interesting, cool. Oh yeah, this one was I got to zoom in for this. Could we just have a look at this graph right here real quick? Evaluating centralized exchanges. How would you evaluate a centralized exchange? Let's have a look at their liquidity, security, and reputation. These are the key traits that institutional investors prioritize. I should highlight that, to be honest. Cool. So liquidity is the most important trait for institutional investors evaluating a centralized exchange for their trading needs. This is understandable given that institutional investors tend to trade in larger sizes. Of course, cool. Security and reputation are also critical considerations and are clearly at the top of the mind for institutional investors, particularly because they'll store large bulk amounts of their assets on centralized exchanges. While competitive fees are still important, it is clear that institutional investors place relatively less emphasis on this.
Mad.
They don't really mind the fees because they would rather pay the fees and be in somewhere safe that has a good amount of liquidity, essentially,
Interesting.
which was really interesting. But it just makes damn
Coinbase.
sense as well.
Which is Coinbase.
Yeah, but this is a Binance research report.
I know, but that's what I'm saying. They're basically talking about Coinbase. That's what's funny.
Yeah. Cool. And then because I love Kraken, I just highlighted this bit. Kraken's primarily in Europe right now, which is interesting. Let me zoom out. Cool. So nearly 60% of institutional investors prefer to store their crypto on exchanges, while just 20% prefer non-exchange custodians like Anchorage or Fireblocks.
Interesting.
So
You
that's
think
very
that's because
interesting.
if their centralized exchange has a problem, they can get their money back in other ways?
I'm gonna be
Yeah,
honest. I think the institutions. I think institutions are just misinformed.
No, I think that no, because basically, if it's on an exchange, then they have an insurance, like Binance, for example, will have an insurance company backing their funds.
Yeah.
So they're putting their money where it's backed, and they're
And-
happy to pay higher fees for that.
And I think if it's a centralized exchange, then they can
Mhm.
just call in their boys, isn't it? And just be like, yo, this guy's running this company. He's still got 10 billion, but he lost 2 billion of my money. Go and get it back from him.
Yeah. Because it's tightly close knit with SEC and the government regulations and everything, all of the regulatory bodies. So they have more leverage that way, I believe, as well. So yeah.
Banks are just gangsters, isn't it? I keep saying this. Institutions are just gangsters. So you just got to think how a gangster would think. A gangster would be
Yeah.
like, I can either give it to this random roadman, or I can give it to someone that's actually strapped up, tooled up, got everything, been running a good shop for a while, and then they're quite known as well. So their face is out there.
Yeah.
They can't really
Yeah,
go
yeah.
anywhere because their face is known. You're gonna give it to that
There
guy.
you go. So yeah, and then I think something that's very interesting is that investors prefer the one-stop shop convenience, which is very important, I think, to highlight in terms of the space as a whole and where it should be going. One-stop shop convenience, which is very important. Not just from an investor perspective, I think globally. Now, guys, can we type game in the chat?
Game. Why?
Can we type game in the chat real quick?
Oh, let me try it.
You're asking why? You're asking why? Well, let's have a look at this over here, guys. Type game in the chat. Okay, let's have a look at the ETFs in January. Let's have a look at January ETFs, guys.
Wait, what sources you got here?
This is saucy. This is very saucy. All right, cool. So now, guys,
Oh,
these are the dates. Okay, these are the deadlines.
Days. Coinbase is taking a piss.
These are the deadlines for the for them to get approved and come out. Okay. All right. And then these are the final date here, yeah. So you can track, trace, follow all of these coming out.
Oh my god,
okay?
the Grayscale Ethereum Trust. Like the one company I want to pay most attention to is Grayscale.
100%.
All of them. Because they're the biggest
Yeah.
Bitcoin holder in the world.
16th,
Yeah.
15th of June.
And they're on Coinbase. So that's
Yeah.
happening.
By the deadline.
But guys,
Wait. Yeah, I don't think people are clocking what this actually says at the
bro,
bottom. The game that you've just shared is actually fucked.
type game
But
in
it
the
says
chat.
physically backed. What do you mean physically backed?
Nah, keep reading.
Because
Oh, 21 shares. And Bitcoin.
It's staring us in the face, but we haven't clocked it yet. When you clock it, you'll be like, oh,
Coinbase are custodians of.
all of them. That's one bit. Now waiting to get to the next bit. Physically backed. What's physically backed?
Means they actually have it, because with these trusts they have to actually have the asset.
Yeah,
but
by Bitcoin
what's
and
the asset?
Ethereum.
Ethereum.
No,
yeah.
ETH.
Oh yeah, Ethereum.
Yeah, I mean,
Yeah,
it makes sense that ETH is the asset for the ETH fund. Why would that be surprising?
Because that means it's the one thing that the media hasn't spoke about yet and the hype hasn't come for yet is that there's guaranteed spot ETFs.
Yeah.
Oh yeah, absolute Garrett. Yeah. I mean, we all kind of knew it was Garrett. Like, why
we did speak about it in the last episode. We did cover and say that ETFs with Bitcoin, with different cryptos, have been out for ages.
So expect these to pump before these dates.
Just listen, man. I'm not saying anything. My opinion is that you should research each of these individually and pay attention to these dates.
My opinion is there's one clear winner here, Coinbase.
Yeah, 100%. So you want to hold assets that BlackRock, Fidelity, Wisdom Tree, Franklin Templeton, Invesco, Grayscale, Bitwise, ARK, Van Eck, Valkyrie are all tripping over themselves to sell harder than each other. I wonder why. That's exactly what's going to happen with Bitcoin. As soon as the ETF floodgates open, with billions of dollars of fees on the line, there will be enough shilling to make even the most cringe crypto YouTuber personality uncomfortable.
And then there's another bit to add with that. Did you hear about YouTube? YouTube ads for spot ETFs are now legal.
There you go.
Whoa.
Yes. Yeah.
Spot ETFs.
You can't.
So as long as you're actually saying Bitcoin spot ETF, your ad will go through.
Wow.
You can't.
There you go.
For them to be allowed.
And we've seen things like that already being pumped through celebrities already. There's already been celebrity adverts promoting Bitcoin and things like that, right? Cool. Now let's have a look at this. The DCG and Genesis, right? So the digital currency group.
Yeah.
Now let's talk a little bit about the inside of the inside. Yeah, let's have a little look at this. So, okay, so they have defrauded more than 230,000 investors. Yeah, okay. So they got called out for that. But now, this is also including 30,000 New Yorkers of more than 1 billion. 30,000. New Yorkers of more than 1 billion, right? That is crazy. This crypto exchange and custodian Gemini included in compliant for allegedly misrepresenting the riskiness of the Gemini Earn investment program. Anyway, fraud, yeah, fraudulent activities. Certain men are going clear, and certain men are insiding and talking to each other. Cool. Let's continue this in the next page. Hopefully, I don't skip over it. Every time I scroll, it just disappears. Oh, I think did I skip over it? Boom, 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 boom.
So the one you're looking at now.
No, we're looking at this one.
No, wait, hold on. No, hold on.
No, we can't.
Boom, boom, boom. Yeah, okay, here you go. So now look, if we're seeing here, they've got obviously the BTC out, whatnot. So now look, I was the first employee at DCG parent company when it spun out from Barry Silbert's previous venture, Second Market. I worked with 2 execs, boom, 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 no financial relationship, affiliates, boom, boom, boom. What was the bit? I don't know if I actually highlighted it, but basically it was like there's people inside, and then using that inside information, essentially.
Oh.
So yeah, so there
Running
was
the trades.
yeah, but inside from the actual regulator itself.
Oh shit.
But yeah, anyway, Street and Jane Street and jump trading, pooled liquidity from US trading platform. Okay, cool. So this is something that we should not sleep on, guys. 2 of crypto's largest market makers. Yeah, do your research on Jane Street and jump trading. Okay, and look at when they pull liquidity from the US crypto trading platforms, because track and trace this will give you insight on everything.
On their
Okay,
movements.
these are the market makers, the biggest market makers. Cool. Boom, boom, boom. What's this one? Short sellers, the crypto. Oh yeah, cool. So basically, crypto-friendly banks are being attacked. Who would have thought it? Yeah, saw that coming. Anyway, yeah, that concludes chapter 6. Hope it's been gamey enough for you guys.
Yeah, big game, big alpha. Do you want to go next, Ninja, or should I do regular?
Yeah. Let's go into the CFI. Let's go, because I think it meshes well. It meshes well. Right, cool. Let me share my screen. 1 second.
The DeFi.
The DeFi. You know, it's crazy. Like I feel like I've become the DeFi person of blockchain Sensei.
Nah, yeah.
No,
Yeah,
obviously not taking anything from what Keish knows, but I think I spend more time in DeFi than Keish now.
Keish has become the CFI guy.
I've become actually I'm the CFI guy now.
He's a CFI guy. I see him as a private
Basically.
equity guy. I don't see him as a CFI guy, but yeah.
Just listen, mate.
Banking guy. No.
I know, Michael. Hold it, lad.
I didn't say nothing.
Listen, lad. It's can't.
Right, so let's have a look at the top trends in DeFi. Okay, so is DeFi back? Decentralized finance represents just under 0. Not 1%, not 0.1%, but only 0.01% of the approximately $51 trillion value of global financial assets. Sorry, 510 trillion value of global financial assets. Okay, so the reason why, just for the record, there's a valuation of $510 trillion of global financial assets is because there's a whole market that is created via derivatives, which is basically the price action of assets. Which is, people actually forget, crypto derivatives market is way bigger than actual crypto. If you think about it, yeah, because it's perps in it. What's 1% of 510 trillion? 5.1 trillion. 0.1% is 510 billion, and 0.01 is only 51 billion. So literally, like, Ooh, it's crazy, bro. It's crazy. It's crazy. All right, so last year provided evidence that on-chain financial rails offering transparent and instant settlements can provide greater safety and lower fees under the same stress conditions as off-chain financial rails. I completely agree. I'm sure everyone can feel, literally, if you're a practitioner of centralized exchanges, you can see that it's harder to get money in, harder to get money out, harder to get crypto in, harder to get crypto out, right? Okay, so let's have a look at the DEX platforms. Uniswap dominance in the DEX space continues on ETH at least. It even eclipsed Coinbase in volume in March. During the SVB crisis, Uniswap had more volume than Coinbase. That's crazy, right? And in the May Pepe boom of this year, I remember that little bull trap. That was a fun one. The automated market maker Pioneer continued to lead DeFi through the bear. Uniswap DAO, which governs the core DEX. Isn't it funny how the biggest decentralized exchange is the one that's in talks with the regulators? The only DEX that is talking about potentially might have to KYC this. So that's kind of crazy. Version 4 introduced hook, because now we're on Uniswap version 3 now, which I believe includes spot orders, limit buy and sell. But I don't actually use. This is a big deal. It's a lot. So what else? Developers are looking to deploy new features, on-chain limit orders, makes sense, and custom trading strategies can now build on top of the core libraries. Okay, so I want to skip this, a bit complicated. So it'll be difficult for any of the DEX to basically exceed Uniswap, because Uniswap version 3 is a top dog in ARB, Optimism, Base, and Polygon. So not only is Uniswap the biggest decentralized exchange for Ethereum, it's also, I don't know if it's the biggest, but it's a top dog. So I'm assuming top dog is in top 5 in ARB, Optimism, Base, and Polygon, without a major differentiating feature set. Okay, so other chains remain up for grabs. So Hashflow is the one that. So Hashflow is the one that looks interesting. They have a request for core model, strong backers, and will be deploying their version 2 with smart order routing on Solana. Okay, so Hashflow is another DEX to look out for. I've never heard about it. Never heard about it?
No.
All right, cool. There we go. Big ups to everybody that got the WEN token. Every practitioner of Jupiter. I got it. Nash got it. Jay got it. And the only thing we regret is not having more wallets.
Yeah, exactly.
That's the only thing we regret. Like, why didn't we do even more?
Free money from the sky.
Free money from the sky. Every person who got the airdrop 2 days ago, the airdrop's worth $108 right now.
Yep.
Last time I checked 5 minutes ago. And the airdrop was worth $70 on airdrop. So kind of crazy. So yeah, Trader Joe on Avalanche, we've used that. Last time we checked, we've not traded on Avalanche for a couple of months, but the fees were very high for whatever reason. I think they were
I'll go back and check, actually. Maybe it's changed.
Yeah. Osmosis remains number one in the Cosmos ecosystem. I've never used the Cosmos ecosystem except to stake on Kepler to get airdrops. So
and that was Cosmos.
I think that was on Cosmos, yeah. So
Say is actually the Cosmos ecosystem.
Oh, is it? Okay, yeah. So Orca sits as the top exploding DeFi ecosystem, even though Orca is actually banned in many countries, including the United Kingdom. You need a VPN.
Yeah, I've never been on Orca.
We've never been on Orca, except like once. But then we're like, nah, I can't be asked VPN in it. So PancakeSwap is still basically the only game in the BNB chain. If you think about it, what are the DEX you're going to use for smart chain? Still BNB, right? I mean, still PancakeSwap to this day. Okay, so we can see here we've got Pancake at the top, Curve Finance, DYDX, which is the most popular decentralized exchange for more complicated trading, such as perps. Osmosis, which is the one for Cosmos, SushiSwap, which is my personally favorite for Ethereum, actually. And we've got your others as well: BAL, Orca, Auction. I've used that. KyberSwap, I've used that, and the Bancor network. Okay, so trading aggregators and front end. The problem with decentralized in DeFi is that it has an undercurrent that suggests your community will be okay limiting its potential take rate. What we've seen repeatedly in DeFi this year has been quite the opposite. Following the announcements of Uniswap version 4, Uniswap Labs announced a 0.15% fee on transactions made on Uniswap, on its Uniswap Labs owned web user interface and wallet. So I've never tried the Uniswap wallet. It's interesting to have their own products. The company is now making $1 million per month in front-end fees. Okay, that's great. So let's skip over to. So we can see that OX outpaces competition in unique traders for the second consecutive quarter. I think it's very important to pay attention to because I never use OX. 1inch I've used multiple times. Never used Paraswap. Use KyberSwap. So OX is a platform that is gaining adoption. That's something to look out for. Projects I'm watching most closely in the aggregator space are OX, which has now caught and surpassed its top competitor 1inch after settling charges with the CFTC. What is the CFTC? Crazy. Anyway, Solana Dex aggregator Jupiter. By the way, the CEO of Jupiter, who I don't know his real name, but is most known on the internet as Meow, has just released content 2 days ago, a 1 hour, 40-minute interview with Luke Belmar. And it's only on Luke's Twitter. So if you wanna know more about Jupiter and you want, like, one of the best ways I make an evaluation with investments is listen to the founder. Like, remember, money flows into narratives. People like Elon Musk can move Tesla stock. Just like Elon Musk, if Elon Musk and Jeff Bezos, right, by making statements can move their stock, / be on the inside with their insider friends, and obviously it's all scripted and stuff. Why would it not happen for crypto? Jupiter, the CEO of Jupiter is a highly investable person by the world of decentralized finance. He says some extremely brazy things with his 1 hour and 40 in the long form content. He's completely undoxed. He's literally chilling with Luke Belmar, like in a room, talking about Jupiter and talking about decentralized finance and people on Wall Street and stuff. And it's very, very brazy and brave. I can't lie. Hope he stays all right. Yeah. We all watched the interview before. So Solana Dex aggregator Jupiter, which is our favorite Dex and has been for the last 2 months, is interesting for another reason. Solana traders are opting to use the community's leading aggregator in greater percentages than the leading Dex Orca. What does that tell you? Best UX. This could be a hint of things to come as interfaces add additional value on top of the on-chain protocols they route transactions to with additional tooling like Uniswap X or Jupiter's DCA tool. Let me tell you, as a practitioner of DEXs, Jupiter is the best DEX I've ever had. They have multiple features that you cannot have on other DEXs. They have an in-DEX multi-chain bridger. That's what Uniswap doesn't have, and any Ethereum DEX where you can basically bridge assets onto Solana with ease. And they've got a dollar cost averaging tool where you can dollar cost average every single minute or every 5 minutes or every 10 minutes with a budget. So you can say, I want to invest $5 every 10 minutes for the next 3 days. You can set those kind of commands, which is sensational. So payments, could this be the year that Lightning finally takes off? For anyone who's been in for a long time. It's always talking about Lightning Network, but the Lightning Network has been coming slow. So, okay, go on. Yeah. It's just annoying because things like BSV, Bitcoin Cash, and Ethereum Classic, annoyingly are things that me as an investor disbelieve in, but the price action does the price action, right? Do you guys know why Bitcoin? Bitcoin Cash, which is the 2017 fork of Bitcoin.
Yeah.
Right, okay. Fair enough. You know, he's also got the man behind him. Do you know why Bitcoin Cash still exists to this day? Because the CEO of Bitmain, which is the biggest, I think, like CPU miner or something like that, is a founder of Bitcoin Cash.
They're the biggest manufacturers of Bitcoin mining chips.
Yeah, Bitmain. So the CEO of CEO and co-founder of Bitmain, which is the biggest Bitcoin mining chip in the world, founded Bitcoin Cash. Well, Army Slash is a major backer. Yeah, let my thing run, or the whole thing's done. Yeah.
Bars.
Yeah, so basically Chinese Bitcoin is BSC.
Yeah. No. Bitcoin Cash.
Bitcoin Cash.
Yeah,
sorry,
Bitcoin Cash makes the Chinese Bitcoin.
BCH, yeah.
Yeah. Yeah, Craig Wright's going hard. So okay, so anyway, I would have expected the Lightning Network to have more capacity than Terra Classic USD, but USDC post Lunar collapse is still twice as large. Let us not forget that Terra is still a top 200 coin and is being traded. Like FTX is still being traded. Like the volume is not zero. Millions of dollars are still traded in FTX token. Like you can make money from that consolidating FTX and Luna market. It is a viable trading pair to this day. Don't know why. It's true. It's true. Yeah. So there were some other killer payment protocols coming live that will change how we transfer crypto as 10x improvement payment systems versus the traditional banking rails. So basically, all the companies raising tons of VC funding, Sphere, Decent, and Solana Pay. Skip all these. These are the tools that AI agents and decentralized physical infrastructure networks will use to pay one another, not JP Morgan, and they serve as the financial backbone for new types of decentralized, don't know what this means, SOC?
Society.
Decentralized society networks, where synergistic actions between users are rewarded with programmatic payments. Investment in the space fell to just under 500 million, that's $500 million, after 6.5 billion poured in the previous 3 years. That's normal.
It's returned to normal.
Yeah. So on-chain perps, yes, our favorite thing in the world, isn't it, Nash?
Don't get me excited.
Don't get excited about perps.
Down. Come on.
All right, listen to this, right? So DEX spot volumes averaged around 15%. I'm going to wrap up in 10 minutes, so this is how I can go. DEX spot volumes averaged around 15% of SEX volumes, which is very, very high. That's a lot of volume, 15%. With Uniswap leading the way, obviously. When it comes to futures and perps, the lifeblood of centralized finance markets. Because remember, the cryptocurrency market is only so big, but the futures market is insane because that's the derivative cash flow of price action. So the lifeblood of the CeFi market. So 70% of all trading volume on centralized exchanges is with perpetual futures, not via spot, right? This is compared to the DEX market, where 98 to 98.5% of the volume is spot, and only 15.2% is perpetual futures. But that ratio is about to change. Obviously. With me me and Nash and Jay single-handedly contributing to the figure.
Bow, bow.
I'm joking. We don't contribute to the figure. We don't contribute to the figure.
No extras.
Right, so we've obviously got some cool chains that are doing lots of perps. Optimism and Base. DYDX has been the most popular DeFi application on Ethereum, leveraging Starware's Layer 2 infra on its platform, which by itself is currently the 5th largest roll-up by total volume locked. That capacity should increase with the migration of DYDX version 4. After the project launched its own customized standalone Cosmos. I'm starting to get bullish on Cosmos, man. People are just doing things in Cosmos, and I feel like I'm missing out on understanding what's really going on over here.
Because Cosmos is a massive ecosystem and network, kind of like the cosmos, like the stars are. That's why it's Atom.
Okay,
But
that
it's
makes
never at
sense.
the forefront, so it's just part of the background.
Yeah.
It just serves as crucial infrastructure.
Sometimes the best investments are the ones behind the scenes. Like with Jupiter, we have to understand is there are many lesser known Solana dexes that are basically Jupiter on the front end, but then white label it. Sorry, Jupiter on the back end, but then just white label it, and then just say in the corner.
Yeah, like
loads.
Bird Eye is the go-to for people when they list a token, just so people know it's at least semi-legit. And it always says powered by Jupiter. The back end is completely Jupiter.
Yeah. Half of Solana Dex is just powered by Jupiter in the corner with the logo.
I mean, it's hard not to do it because they made the docs so easy and the API call so easy in Jupiter.
Yeah, Jupiter actually encourage people to create their own dexes and own spin-offs. It's in the white paper. It's part of their culture. This is why you should... Like, I'm very bullish, right, on the Jupiter token. When that drops, I think it's gonna go crazy. So watch out for the Jupiter drop. Okay, so aside from Solana dexes, there's Drift, which is another perp platform, which is still in kind of beta stage, but they're doing an airdrop as well. One major alternative to watch is DeFi OG Synthetics. Its under remedial releases coming. It will introduce cross-margin functionality, support multiple new collateral types, and a range of other trading improvements. Okay, so this right here is basically the perpetual decentralized exchange landscape. For the ones that don't have coins such as Jupiter and Drift, yes. The key is to use dexes with that. The key is literally to use dexes that don't have crypto. And there is a large chance that if the dex that you are using doesn't have its own coin, there is a large chance that they're gonna drop a coin at some point. If you are an early adopter in a dex that doesn't have a coin, the chances of you receiving an airdrop, if that dex drops a coin, is very large. And if you just multiply that across different wallets, if you really got time, you can make a lot of money.
Yeah, you can make stupid.
Yes. And get this, yeah. Even my test wallets with $30 in them qualified for the $100 airdrop. So I did 3x on my test wallets with free money.
Successful test.
Yeah,
successful test. Crazy, right? So let's you DM free trial to blockchain.sensei IG, and then I'll give you the private Zoom link and the times to the private webinars. If you want to skip the free trial, just click the link in the blockchain.sensei. Literally, superjoy.com/blockchain-sensei is the ultra link where you can get everything, including the subscription service. And then once you subscribe, if you go for a lower tier, I do recommend upgrading to Mr. Harding's classes as well, because then he'll give you the macro alpha and this. You'll be all right with me, Mr. Harding, Jay, and then Tuesdays with Nash. Come on, you're gonna be good. Futures, stocks, DeFi, spot, DGen, NFTs. You good?
All bases.
All bases. Okay, so let's finish off with CeFi. So the CeFi lending markets wreaked havoc on crypto in 2022. Their disastrous effects on the centralized lending market, plus rapidly increasing interest rates, had a spillover effects in the DeFi lending market, but things are slowly coming back. I'm not sure I can be friends with you if you think that the top 10 DeFi protocols in aggregate will be worth less than the 216th largest banking market cap in 5 years. So I can 100% confirm, as a practitioner, Aave's service is absolutely flawless. You just connect to your wallet website, you get a quote on your on what loan you get. There's no speaking to anybody. One Ethereum right now is priced around $2,300. If you are sitting on one Ethereum, you can immediately, within the next 2 minutes, get access to about $2,000 of USDC, just like that. You know what's crazy about Aave? They're charging me 5% APY on my USDC loan. The collateral is Ethereum, but they're offering me 1.37% yield on the Ethereum. So price action wise, 1.37% yield with 10K Ethereum, Ethereum at 10K gives me fiat profit on my loan.
Crazy.
I don't even know how they're making money. I don't understand. The incentive to get a loan is too high.
I think it might be because people don't know about it.
Like, how are you giving me APY on my loan that I'm like on my asset that I'm giving you? Like, why are you giving me more asset back? Wow, that makes sense. Okay, so I also recommend everybody this year take out a small decentralized finance loan. I'm talking like 0.05 Ethereum. That's $100 and get an $80 loan, just so you can understand. Like, I couldn't believe, like, I've never had a DeFi loan until summer 2023 after 8 years in crypto. I just thought, let me just go get one to learn. And I thought it was way harder than it was, and it was too easy. Like, the money came too quick, and I just thought, wow, I just got like money like straight away. It's crazy. Anyway, so you're gonna like this, Mr. Harding, and I'm gonna go over to you. The trend towards real world tokenization is mostly captured in two areas: yield bearing stablecoin holdings at exchanges like Coinbase and DeFi lending protocols. For example, sorry, yield bearing stablecoin holdings at exchanges like Coinbase and DeFi lending protocols. That's it. By the way, I tweeted on Blockchain Sensei Twitter this morning that I'm starting to really pay attention to the stablecoin market, right? On the 27th, 2 days ago, Tether released their Euro stablecoin, right? Binance have a subsidiary called Toko Crypto, which is basically the Indonesian Binance. Mind you, Indonesia is like top 10, it's either top 10 or top 20 in terms of global adoption for cryptocurrency. Indonesian cryptocurrency adoption is higher than the United Kingdom, and Indonesian crypto traders 5x the forex traders and the stock traders. So it's one of the countries that have way more crypto traders than any other asset class in the world, right? Binance have their official, I think, IDPR or something, basically Indonesian rupee stablecoin owned by Binance, and it's existed since 2019 for the fourth most populous country on planet Earth. Racks. Listen, Binance are not going down. They're not going down. I don't think they're going down. Go on. Well, think about this. Even if Binance get banned in the Western world, who cares? There's more people in Asia.
Wait.
Oh no! Oh! You're banned in America. Banned in. All right, it's unfortunate, but it's gonna thrive. Like it's still gonna work. It's gonna work. Yeah, maybe not for us in the UK, but globally, I think Binance will survive. So, finally, they're safer than CeFi lending services because they're more transparent. Yeah, 100% transparent. I know that, and quick, right? So, liquid. I think it's LSTs, liquid staking. Tokens, that's it, have become too. I'm getting too many acronyms in it. Have become popular collateral types for Maker, constituting 26% of deposits. As more DeFi native investors seek to juice their yields, having an interest-bearing collateral like Lido Stake is big ups to Waj for explaining this to me, right? So, first of all, let's just remember that Maker, estimated MakerDAO revenue and profits, assuming 50% growth in DAI supply, DAI stablecoin, and a reduction of 0.5 in interest rates by 2024. Sorry, 1 second. It basically said like MakerDAO. Maker now trades at a forward PE ratio of 13-ish. I know that means something to you, Mr. Hardin. That's This makes me want to find an entry to Maker. Yeah, Arbase TVL is up 80%. That makes sense. And there's tokens like, so basically liquid stake. Believe it or not, staking ETH up until very recent times, as in summer 2023, was not like, it wasn't like the best asset to stake. So deep, because if you stake Ethereum, I think with Coinbase and most exchanges, they don't give you mad yield. It's like 4%. Like it's not like Polkadot. Like Polkadot and Kusama, you get 15% on Trust Wallet. You get and Solana, it's easy to get 10% plus. But with ETH, they needed to, well, they as in like decentralized finance protocols, they needed to create synthetic instruments such as Lido Finance have STETH, Rocket Pool have RETH, and look what Coinbase have, CBF. This basically, I just think there's going to be CB everything now. CB BTC, CB Cardano. It's just going to be Coinbase is just going to wrap everything. It's going to wrap.
To make an extra 10% on top for people to buy the same thing.
No, it's even worse. It's even worse. What they've gone and done is they've robbed the recipe for the bun. They took out the expensive ingredients, put in the cheap ingredients, and robbed the packaging and put their name on it.
They did a snowfall.
Yeah.
That's exactly what they did.
Mad.
That's crazy.
And they've got the largest exchange.
That's crazy.
They got the largest networks. Yeah, they're taking a piss. Coinbase are actually genuinely taking the piss.
You know what could be a good play for somebody? Like if you don't have, because a lot of people ask me like how much money should I get started in crypto? We always say it's not about money, it's about education. The money will follow as you get more educated. You'll naturally start investing, right? But I think a good use of time here is just like if you really have time, dedicating some of your life to understanding the plays on base chain is probably one of the best things you can do with your time, because it's not trending. But if you're gonna bet on a pre-trend, why would you not bet on base? That's like the most sensical chain in the entire world and undervalued. That makes sense.
Yeah, crazily. Let's see if this base token happens on it.
We don't even need to wait. We can start exploring the base chain now. I haven't done so, but start looking. Surely there's altcoins on base now.
Yeah, must be. With the NFTs, there's probably it's open source as well, so I doubt there isn't.
Anyway, on to you, dude. That's enough.
All right, cool. So I am doing the big fat boring regulations.
Oh, regulation.
Oh, not regulation.
Yeah, regulation. But what I'm gonna do during the regulation, I'm gonna spice up the regulation. Talk to the man about what the regulation actually means. I'm gonna let you man know. Yeah, it's regulation. I'm gonna show you what the man's on the ops on the side are trying to do to man. Get me? So let's go. So basically, man is basically saying this is a 30-page piece just on regulation. Let's just get this. All the highlights here, all the highlights. At a 1.6 trillion market cap, crypto certainly registers as a material risk and is dangerous for consumers. We got that because of last year. Now, political leaders see the economic potential of this new technology and don't want that growth and job market offshored due to them being uncertain. So basically, nobody in the world wants to be one that goes, "Oh yeah, we regulated crypto and now it's not in our jurisdiction." And then crypto goes on to be more than 1.6 trillion in revenue volume, and then their country is just broke because they decided to make the wrong bet.
Yeah.
So that's what it is. It's like a shopkeeper going, "I'm not going to sell vapes." That would be a dumb move. That would be a silly
Yeah.
move for a shopkeeper.
Yeah.
It's
So
like the
they're
club
all
getting
like-
sold on his block.
Yeah. Even if you don't want to do it, just in case.
You know what, Mike?
Got to stay competitive.
The
Yeah.
perfect example is that most boss man sell alcohol.
Yep. But they don't drink.
Jeez.
Yeah.
Don't believe in it, but they got to do it just in case because of the P. So that's crypto right there. So whether we like it or not, they have to play ball with crypto, especially in America, because America and the UK are in this weird geopolitical position where their money is not really the money is not money in. Get me? The money is not really money in. The money's not doing what money's meant to do. So they got to find something that's money in, and the money that is money in is crypto. So they got to kind of just go, all right, cool. Let's do a little. So bear market blues. Unfortunately, the main thing why regulators are on it is because the amount of people that got hurt by scams and by frauds. So whether we like it or not, when regulation comes in, the crypto market will 5 to 10x. Will. Because the institutions are there now, but they're not really swimming in deep. They're not swimming in deep because they're in a position whereby if they fuck up, they're liable. The moment the regulation's in, guess what can come in? Insurance. And when insurance comes into crypto,
Crypto insurance.
Collateral, yo.
So there's gonna be
Yes.
a whole new world called crypto insurance, and that's a
Yes.
multi-trillion-dollar
Yes.
market. Yeah.
Yes.
so I'm giving you big alpha here right now. Right here, right now. If you are thinking about starting a business, you are a lawyer, you are an accountant, and you want to get into a business, trust me, look into crypto insurance. Trust me. If there's one clip that could go out on the internet for 2024, it's Mike saying, look into crypto insurance if you're in TradFi, because it's inevitable. Absolutely inevitable. So next is national security. So all the regulators are on this national security thing because obviously it's an obvious one. Why do you think the Americans did everything that they could to get all the Bitcoin miners? Why do you think the moment that the majority of the hash rate came over to America, China went Bitcoin's banned? Why do you think that is? Because if you've got the majority of the miners, guess what it means? It means you can reverse transactions in China. It means that you can see transactions in China. Do the Chinese government want the Americans seeing what they're doing?
No.
The Chinese government want the Americans stopping transactions? No. So the best thing to do is just go, right, nobody can use it because it's too dangerous. So that's the national security threat that no one's really talking about. So next one is our size is not size. I like the slang there. So others have simply moved to emerging fields like AI. We often tout the number of US crypto investors, but many of them aren't necessarily happy to be there. At this stretch, We hope to see crypto ownership will lead to single issue advocacy. Now, this I'm going to zoom in on, and this sums up financial literacy, because what we're seeing is almost 3/4 of people that own crypto bought Bitcoin when it was over 20K. You can see the majority of people were buying when it was 45K. So what happens? It means that people buy at the high, and then when it goes down, they feel like they got scammed. So at this moment in time, over 80% of people that are in crypto are actually down. Which does that justify regulation? Of course it does. Of course it does. If 80% of the people, that's crazy. So next one is we have to consider when it comes to regulation. These men that are doing the regulating are better old, fam. They don't really understand what the technology is. They just about know how to turn on their phones. And then the second thing is, yo, realistically, Biden is what? How old? 80, 86, 87?
He's gone. He's lost it.
It's dust, fam. Put it that way.
Exactly. So, and when we've been in House of Lords and House of Parliament, these men ain't exactly young, you know. It's a bit complicated to explain even what Fortnite is to them. So, yeah, it's a bit mad. And then what makes it worse is with AI, these old people are willing to use ChatGPT because it's easy and simple. They're not willing to download crypto wallets and use crypto wallets and see the benefits. If politicians were to see how quickly they could get a loan on a DeFi pool, do you not think politicians would be running up all their spare cash, doing a Mazza, getting loans and going here and there? Of course they would. But because they don't understand it, because the UI UX is terrible, that's why it's not passing. So that's what needs to change. So next is obviously man like Gary Gensler, who somehow didn't have his eyes on the right thing. He completely missed Sam Bankman-Fried. Meanwhile, was trying to hunt down Coinbase, which is a bit stupid. So that was him. Next, the return of the bull. Obviously, it's difficult to crack down on crypto, but the main thing that is going to happen is they're going to be looking at auditing in real time, and this is why stable coins are important, but dangerous at the same time. So the reason why the world doesn't want stable coins is because it means the world doesn't want crypto is because it means companies will have no excuse why they can't do a real-time earnings report every day.
Damn. Because the books are no longer hidden.
Yeah, that's the biggest scary fact. Yeah.
That's why they don't want it, bro.
That
Nobody
explains the
wants
XRP SEC situation, you know, because of how many companies are already invested into it. The minute it gets approved, all of these now got to show just how much they're into crypto, and some of these companies probably are lying how much they're actually in.
Yeah, they don't want to say.
Yeah, but also this is why they created private blockchains and they're hiding all of that element of things to the public eye. But also, I think that it's a.
Bro, do you think the entire none of the stock market is going to look the same if there's real-time information?
But then look at the way they pushed out the ETF, bro. That's not real-time information. That's gone through the New York Stock Exchange and the Nasdaq.
Yeah, but I'm saying, like, with stable coins, if companies are starting to use stable coins and stable coins become dominant in the American economy, that's a problem. Because then you can actually see in real time how much money Nike has made on that day.
But that depends if it's private or not.
Yeah. So that's why they're trying to control it. So that's that one.
Yeah.
Let's keep going. So this one has a 25% chance of passing. This is just about backing up stable coins 1-for-1, which in my opinion makes sense. Stable coin clarity would obviously help out Paxos and Circle, and US banks that are backing or backing up the euro dollar. The later would prohibit banks from terminating customer accounts without valid reasons. beyond reputational risk, which would be good. Okay, so now this is one that we should not be ignoring. Okay, so everyone needs to listen up to this one. This is a 40% chance that a watered down version gets passed. Now, this is the DAAML and the CANC. Of the DAAML and CANC would effectively end DeFi in the US by imposing unworkable anti-money laundering and sanction law requirements to open source software contributors and non-custodial peer-to-peer networks. It would grant broad powers to the Treasury Secretary to determine who controls a protocol or who earns exemptions from AML requirements. They would criminalize activity related to publishing certain types of code or even potentially coerce speech by forcing developers with no custodial relationship with their users to write code required by financial regulators. Everybody actually just deep how deep that is.
It's crazy.
So by force, the US might, number one, force developers to write code for them or threaten them with prison so that they can control all the dexes. And number two, they might choose who can use the dexes via KYC or you can't use them at all. Number three, they might just ban the entire thing and make the whole thing illegal anyway.
That's where the dark web comes in, and that's where there's dark web DeFi.
And that's where unfortunately the next bit comes in, which is them using the National Defense Authorization Act, which was where they're basically saying all the money that's on the dark web is funding Hamas and North Korea. So you're basically the same thing that they've done with Tornado Cash. If you are using DeFi, if they go full hard with this bill, it would mean that you are literally on the US security list
for using decentralized finance.
That's if they go that far. So he says there's a 40% chance of that happening, or a watered down version. But yeah, basically they're trying to kill DeFi like hard.
But I mean, that just seems so difficult. How are you gonna say that me making swaps from Jupiter is contributing to terrorism?
It's not about it being viable.
But I know. Yeah. But I think that it will be tough for them at a reach. Anyway, please go on this time.
Yeah, it's a big reach for them to do it. So I don't think they'll go that hard with it. I think they'll do it, but I think they'll do like you've got to pass this test to be able to do DeFi, or you got to. I definitely see them giving some mad ultimatums to some of these devs.
Just be ready for a series of events that may lead to this.
Yeah, there's going to be something that's going to happen, and then all of a sudden these DeFi platforms, whether we like it or not, are going to have KYC. And then the next bit, this is actually passed in August 2023. So this is actually an actual law that I don't think many people know about, because I didn't know about this. Back in 2021, the Congressional Budget Office claimed that billions of dollars in incremental tax receipts could be generated if only crypto brokers submitted tax reports to the IRS like their TradFi counterparts. This pay-for was stuffed into the bipartisan infrastructure bill, a shoddily drafted broker rule. So anyone who's ever reported tax liabilities by manually passing thousands of crypto exchange trades knows that this rule would have been somewhat welcome if it had merely focused on exchanges like Coinbase and Kraken. However, what this rule means, the proposed rule means ostensibly, and it's not a rule, it's actually live now, by the way. The proposed rule ostensibly requires DeFi application builders to maintain centralized control of sensitive user information. So whether you like it or not, every single DEX that is live in America is collecting user information. And if they don't, then they get in trouble with the SEC. It undermines privacy and imposes significant burdens on small business and developers for limited financial upside. Also, the letter of law may even inadvertently require decentralized applications to add centralized custody in order to comply with the tax holding requirements, which defeats the object. But law. Yeah.
Centralized exchange.
Yeah. So the government lied about the failures of some Silicon Valley and Signature Bank earlier this year. I mean, they literally caught on tape lying about the bank's solvency just moments before the collapse. If this was on blockchain, that wouldn't have happened. The issues were caused primarily by the whiplash effects of the Fed's unpredictable interest rate policies, them spiking them up, dropping them down, and that meant that regional banks like Silicon Valley Bank that took out loads of loans and took out loads of bonds, thinking that the rates would be like 0.1%, and then they shot up to 4%, meant that they got absolutely murked on paying crazy fees. So basically, the Fed did that to themselves. So basically, sitting senators worked in cahoots with short sellers to threaten existing banks with investigations, force them to kill or significantly pare back otherwise healthy crypto customers, including highly liquid stablecoin issuers who are excellent bank clients, and discourage them via officials at the Fed. And so basically, the American government basically said to banks, "Yo, if this person shut down their bank account because they've got crypto." So yeah, that was a bit mad. So crypto tax, again, this is mad. If you use DeFi services, may soon have to collect identifying information and tax reports on your use of their front end interface, even if they never take custody of your assets. It is mad. Even if you never touch on or off ramps or even stablecoins, but simply conduct ETH to other token DEX transaction from a self-hosted wallet, you're on the hook of self-reporting all of those gains and losses with no minimized exemptions. So again, the Americans are not playing when it comes to tax and DEXs. If you fail to accurately report liabilities or simply dispute cost bases that your service provider submits to the IRS, you better watch out because the government is getting more aggressive with tax enforcement and asset seizures. So basically, what they're working on is if you don't declare your tax on your trades on the DeFi, they will work with developers to seize your assets. Which
also just to add to that, America is over the top. Yeah, just let you know. The IRS in America is like their own personal tax SWAT team.
Yeah,
it's not a joke.
So this is in America. Obviously, in the UK, I reckon we're pretty safe because they haven't got devs on them levels and they're not that strict on it. And in terms of tax in the UK, I think there's a lot of government politicians that would get fucked. So I think in the UK we're about 2 years behind whatever's happening in America. But keep your eyes on these movements because the US ain't playing, and as we know, the UK likes to just copy what their big brother does every now and again. So about 1.3% of US GDP is generally laundered through traditional finance. A much higher percentage is laundered cash. A red herring that allows financial authorities to believe they're doing a good job. But crypto is actually better at minimizing illicit transactions and money laundering because the blockchains allow you to trace everything. If we hadn't sanctioned the sixth largest economy in the world, Russia, then we would be down 40% in terms of illicit transactions on blockchain. As you can see, this big blue bit is all just money that was moving in and out of Russia. So if it wasn't for that, the illicit money on blockchain would have actually dropped. But hey, and it would have been around 10 billion in comparison to 1.3% of the GDP of normal money. And then the SEC and who they choose to protect. About Gary Gensler chatting shit about ETH and just making up rules as he's going along, which we already know he does. About Gary Gensler not really doing what he needs to do and then waiting for something to crash and then coming along and going, oh yeah, they're naughty boys, instead of just doing his job.
Do you reckon Gary's going to get fined, or is this some kind of internal joke playing the American system, just like with Biden? You know what I mean? Like, if Biden's the prime minister, then of course the head of the SEC is going to be a joke as well. You know what I mean?
Yeah, of course they speak to the board. They speak to the board.
I think it's all a narrative. I think Gary Gensler is there for a reason, but it's just figuring out what reason is he there for. And I think it might be to be the fall guy to justify all this mad KYC and all this mad shit that they're doing on the DEXs.
Because they painted him in a negative light for the longest anyway. So at least that way, all the negative press that we give, it just falls on him. Swap it, put another guy next pocket, but it's still the same regime behind it.
Yeah. So he's just playing bad cop. And then once they've got all the rules that they want in place, get rid of him. Now someone else. But like you said, it's still the same rules. It's like the guy that brought in VAR in football. Nobody knows who. Like dickhead ruined all the football. But guess what? Even though he's been fired now, VAR's still there, still ruined football. So that's what it is. Then it's talking about the grayscale case with the SEC, and how the SEC are just attacking everyone. Okay, so now this is something that actually made me think and made me actually get kind of worried for everybody in crypto. This is just me being dark and pessimistic, right? So if you use Tornado Cash, you automatically get put on the sanction list, right? The American sanction list. You're classed as an automatic American enemy of the American state. And then they can call in the FBI. They can do all sorts of madness shit that they want to do. And then I thought to myself, how does anybody know? Does anybody take the time out to check if any of the USDC that they've got was once in a mixer? And how would you do that anyway? I know it's dark and pessimistic and a bit mad, but every single person using crypto, including Coinbase, might have money in their wallets that is money laundered money that was from Tornado Cash, and you wouldn't even know. So this rule that they've brought out about all money that's gone through Tornado Cash, it's like putting Vimto or Ribena in a cup of water. It dilutes into the whole thing. Like the cup of water is clear, but you've only got to put a tiny amount in, and then the whole thing changes color.
Yeah, but you can say the same thing with the system, the government system that's in place already with drug money. It's the same thing.
Yeah, it's the same thing. However, with the drug money, it's not traceable. With this, it's literally traceable.
Well, if you put it through a mixer, it's not really.
Yeah, but that's the thing that they're saying. If what they would do is they would trace the transactions when they've come out of the mixer, and anyone that's ever touched any of that USDC that came out of it would now be on the list. So that way they could literally just go, okay, anyone that's got USDC, guess what? We're revoking your passport. You can't go anywhere. That way, they've got.
How do you know it's come out of the mixer?
Huh?
How do you know that it's come out of the mixer? Is my question. Because what a mixer is basically just a swapping of wallets and the transaction being sent of the same amount from a different wallet.
I don't know. I'm just hoping that they wouldn't be able to do that, because if they can, then that is a genius trap to get all of the people that are awake in the matrix.
Yeah, no, I don't think that's gonna work. I think we're good. I think we're good.
So yeah, I'm hoping that's not the case. That's just a super dark scenario. Sorry to ruin everyone's dinner and lunch, but sometimes my mind thinks of these things. Someone has to. So permissionless systems are a threat to the entire regulatory state because they are, by definition, intermediary-less. Regulators lose information, they lose control, and they literally lose their whole reason for existing. So regulators need to regulate crypto because decentralization gets rid of most people's jobs. It gets rid of Visa. It gets rid of all these intermediary parties that they're getting paid from. So yeah, that's that one. And then ultimately he puts, what we've got to do is just have better and higher standards. And it's the crypto community's fault that the regulation is coming in, because we allow these pump and dumps, because we encourage each other to get into these projects that can dump on other people. And if 80% of the market is at a loss, then we're kind of giving credit to the regulators in terms of what they're saying. So yeah, that was the bit. So yeah, that is regulation. It was a bit of a downer in energy, but
listen, man, we're all good over here, man.
Someone's got to read it. Someone's got to, like, it's one of them ones, isn't it? It's better to be aware than not be aware. I'd rather, and it's like the same thing about when people are like, oh, would you go to Davos? Would you go to World Economic Forum? Why are you reading these World Economic Forum papers? Why are you trying to log into their website? And I'm like, bro, I'd rather know what these men are doing than just be ignorant.
Yeah, and to be honest with you, they pump, millions of views into their stuff anyway, so it's
Yep.
fine. Of course, there's not a high amount of real actual users, but in terms of their narrative is for it to be global anyway. So if we know about it, it's not really a problem because they put it out there for us to find out.
Yep. So you've heard me say it before. I'll say it again. World Economic Forum. If you want to invite me to Davos, I'm happy. I'm happy to come, fam. Let me know what you man are doing. Let me in your kitchen and let me see what you man are cooking up because I want to know so that I can tell my people.
Well, I don't think you should tell them that you're going to tell your people.
Yeah,
Oh,
they
yeah,
want that.
Yeah.
Yeah,
I
kind
think-
of.
Yeah, they'll get
What he meant was Mr. Harding would like an invite. When he's going to keep all secrets. He
Yeah, and
promised
my
me.
not going
people,
to tell anyone.
by my people, I mean institutions that I work with and other high net worth wealthy people. That's what I mean.
That's what you mean. Yeah.
So
That's your
Google, I know you're listening to this and you're recording this. So Google, if you would like to pass this message onto the World Economic Forum that Michael Harding of Blockchain Sensei would like to attend next year's Davos, please get one of your agents to come and find me and give me an invite, please.
Right, you've got your subscriber call, haven't you?
Yeah. So I'm gonna bounce onto that one now. I'm
Thank
gonna
you, guys.
ask Josh if he's okay if I open it up for 15 minutes to people to be able to come on to my subscriber call. Is it okay if I do the first 15 minutes here?
Yeah, that's fine. Let's go.
Okay, cool.
Wait, you're gonna stay on YouTube?
Yeah. Just to show some of the macro plays that we're looking at that are just
Why not?
Nasty. Are you ready?
Oh my god. You guys were looking at Roblox?
Yeah. That was for a different side mission.
Oh my god.
That was actually for an actual government side mission. Like literally. We got sent on a mission by the government to write a paper on something. So I was looking at something. All right, cool. So something that I did earlier, because I like my macro, is I created a whole watch list on everything in China. So what I've got is the Chinese index. I've got the Chinese energy market. I've got the Chinese real estate market. I've got the Chinese healthcare index. I've got everything. I've got all their stuff. So I was just curious. I've just been like, what's happened to China? Where's China gone? Why is China so quiet? So started doing some digging. And I saw something very interesting. Very, very interesting. And that was this bad boy. And this is the Chinese index. They've got the China 300 and they got the China 1000. Yeah. But the main index is the China 300. Yeah. This is the top 300 Chinese stocks. Now, what are the chances, guys, if you know basic technical analysis, look at this right here. How do you even get a 2007 to 2021 exact monthly wick that hits a resistance line? How do you do that? So I saw that and then I started going down the rabbit hole. I was just like, nah, that's mad.
Something fishy.
That's a hella fishy. Like, and if I was using daily candles, cool. But I'm using monthly candles and that happened.
Whoa.
So that's when I was like, yo, this is crazy. And then I clocked this.
What did it break through the trend?
It's broken through the trend, but look at what's happening in the RSI. And then I clocked this support level here on the Chinese stocks. And then I thought to myself, you know what? Hang on a minute. If all these Chinese companies are getting liquidated, where is the money going? And then I thought to myself, hang on a minute. What would happen if I overlaid the crypto markets with the Chinese markets.
Harding, you're cooking.
So what should happen is we should get an inverse. And this is the first time I'm doing it, so this is we're about to see. Oh, you see how it doesn't even want to show it? Oh, you see trading view? You see you trading view being a pagan? All right, cool. Right, we'll do it manually. Okay, so let's do it manually. Oh, here we go, here we go, here we go. And look at that. Look at that. What happens? The Chinese markets come down.
Yo.
Crypto markets go up.
Yeah.
Basically,
For the
not really trying to let me do it properly.
Oh,
But yeah, nonetheless, that's that. So I wanna get someone to go on the actual date on their screen on so Josh, if you on your screen on the other side, just tell me what you see in around, let's go back to monthly. So what were the crypto markets doing in February 21?
Total.
Yeah.
February 2021. Oh my god.
Were they bottoming out?
No, wait 1 second. February 2021. Yeah. Oh no, it started to pump.
Started to pump. February 21.
Yeah.
All right.
February. Yeah. 2021. Yeah.
And January the 19th, what were they doing?
January 2019 was dead.
Interesting.
Yeah. All-time low, actually.
Okay. That might be in relation to COVID. And then what about October 2022? September and October.
2020. I did a similar thing. Like, I think it's actually following it. It did a similar thing. A massive pullback, pull down. February, yeah.
Well, either way, my thoughts were: does the liquidity from the Chinese markets go into crypto? Is that where it comes from? And then I also thought to myself, everything in China economically and politically, the US copies, but like a year and a half, 18 months later. So the CBDC stuff, China's done it ages ago, and now America's doing it. The CCTV, like all this like hyper CCTV stuff and regulation and whatever, like China was doing that from time ago, and now America started doing it. So I was thinking to myself, if that was the case, would there be a justification for the US markets going down 46%? Now, Josh already knows the answer. And to get to this support line, it means the Chinese market, before it turns around, needs to drop 52%. Now, I thought to myself, geopolitically, right? If the American markets or the UK markets dropped 52% with people's pensions attached, what would happen?
Lock off.
Riots everywhere.
War boys. Civil war.
But did they ain't got that control?
Exactly. But
Yeah.
China does. China can allow if let's just say hypothetically, right? China did this to themselves, right? And knew that it would have a knock-on effect on the American market. China is in a position whereby the people can't riot about their pensions. You can't do that.
Yeah.
They'll just lock you up or shoot you.
Yeah.
Whereas in the UK and America, if you lose 52% of your pension, boy. Boy.
Yeah. It's long.
It's a different thing. So let's go to some of the macros that we've been drawing out.
Also, take into consideration war and preparation for war.
Yeah. So isn't it funny that this exact same thing that we pulled out on China on that double top is also right here, right now on the Vanguard Total Index?
That's mad. Even damn.
And the craziest thing is, from like what I've been seeing over the last 2 years, the dollar has to crash, bro. Inflation is at all-time highs. Borrowing is at all-time highs.
It's overinflated. It's already crashed.
Yeah.
And
crashing.
again, that level where the support is 50%.
Thank you, bro.
Now, this TA is suggesting that it's going to happen like basically this week. Now, I'm hoping that doesn't happen. I'm hoping that this TA is completely wrong and that we actually break out and we carry on going up. But unfortunately, the TA is saying otherwise. And even Trading Views auto indicator is saying that we're going down to here.
Wait, what? Going down to coronavirus crashes?
Yep.
And you know what's
War,
mad?
mayhem.
Huh?
What's mad is the narrative of the whole disease X coming back into play now in the news.
Yep.
So it all falls in line timing-wise.
Yep. And then isn't it funny that there's this America going on to multiple wars at the same time?
And UK trying to recruit us.
So what would you do if you knew that you were going to liquidate everything? And actually, it's not a bad thing. People are just taking profit. But they've let it run up so long that taking profit now actually hurts everything. Bad.
Yeah, but what is that going to do for crypto? If all
Crypto's
of this
gonna
comes out of the
explode.
stock market? Exactly.
Explode.
Yeah, exactly.
Because 50%, if even 20% came out of the stock market, that's trillions.
Wait. So let me get this straight. Are you predicting the stock market? Because I just want to hear this correctly. Are you predicting the stock market or is going to crash to COVID lows?
I'm not predicting. I'm just going off what I saw happen in China.
The writing's on the wall, to be fair. If we look at the world, we look at the economic status.
Wait, but if the stock market crashes, how is crypto going to pump? Like that's the ultimate decouple. That's just like everything that's ever happened in crypto just gone out the window. That means crypto just completely decoupled from the entire stock market.
But look what happened in
Yep.
COVID. When COVID,
So look what happened in COVID.
When
Look what
COVID
happened when Silicon Valley Bank crashed.
No, but
crashed.
COVID was in line with crypto. Like Bitcoin crashed just like the stock market crashed in March 2020, and Bitcoin and Ethereum rose with 2020 and 2021 stock market. But in this case, you're saying if the stock market does crash, Bitcoin's going to completely decouple and go up.
Yeah.
that would make sense with what Grayscale and all these other companies have been doing recently in January, though, with the ETFs, because they could see it as well.
And then everyone just runs into it.
Because then they would load up the bag now. When that decouple happens, they've already got their bag. They don't need to start buying.
Ninja, this is only based off what I just showed everybody. And this is the Chinese. Remember, China's market. Everything that happens in China tends to be ahead of us, right? Ahead of the Western world. This is the Chinese market.
Oh my God.
Look, this is a month. These are monthly candles. And look at these wick taps.
Wait, is that basically Chinese S&P 500?
Yeah.
But it's the CSI 300.
Yeah.
Wow.
Chinese stock index.
So you're saying, historically speaking, China is a future indicator of what's going on in the world on the macro?
In terms of like what happens, not the markets, but geopolitically, and like rules that they enforce and things that they bring in. So let's see. So yeah,
get ready for war. Get ready for war. Get ready for war, lads.
So what I did is in the lessons with Josh and with Seppi, what we did is we looked at the sectors that would pump in this kind of situation. So we looked at it would be XL consumer staples. So it would be this sector that would pump. Consumer staples would do well because it always does well in bad times of crisis. So we then looked even further and looked into the companies that are in those consumer staples. So we looked into those indexes directly, and we found that the companies that should do well, if there is the shit going against the wall, would be Procter & Gamble, Coca-Cola, Pepsi, and Costco/Walmart. But yeah, do your own research on those macro players. But yeah, Costco kind of drew a bit of a pullback, as you can see.
I think that's enough for the game. That is the game.
So
yeah,
that's
man. Messari's got to go do his private call, and then we got a private call in 15 minutes. So
yeah. So yeah.
Olympics are a great place to watch the Olympics, guys. It's great.
But yeah, Josh, I'll see you on the call in a sec.
Yeah. Bye, guys.
400 subscribers in 15 minutes.
Okay.
Yeah, bye.
Whole lot
That
of
was
alpha
a
in
whole
that
lot of
call,
alpha,
bro.
whole lot of alpha.
What a call.
Yeah, standard.